The Edgeless Horseman here is April 21, 2022. Today gold is down and silver is down a lot, and people are crying all over Twitter about how crappy miners are. That, yeah, basically crying in their beer all over the place, like always happens. If silver was up 3% today, gold was up 0.75% today, you would see very bullish sentiment on Twitter. Everyone would be projecting the next upside target. Everyone would celebrate being in miners, etc., even though it's just, one day of action. But anyway, it feels good. Everybody's in a good mood. Everybody gets everybody else to buy because they see, the party happening in the mining sector. Today it's the opposite. Predictable. Metals are down. The average junior is down, let's say 3-4%. Some are down a lot. People again are like, their hair is on fire, crying, whining, yada yada yada, and they still can't figure out why is this happening to me? Why can't I beat the market, etc. It's like, if you want to trade this, go ahead and trade this. I don't even try to trade silver. I'm not invested in silver. I have physical silver, which I'm not trading. So why on earth do I care about daily sentiment? And if you're invested in companies, especially like the juniors, the far end of the risk curve, why are you looking at this? I mean, does this look, for example, like these juniors are tracking the price of gold? The price of gold is at 1950. We're not far away from all-time highs. No? Okay, so why do you keep looking at the metals in that case? How does that work out? No, there's so much noise. This is pretty much the only roadmap, let's say, in terms of macro for juniors, because I'm in juniors. Newmont and Franco-Nevada, the quote safest miners out there, the largest, they're up at near all-time highs. Is that a big opportunity? Not if you ask me. Where's the opportunity? In the juniors. Why is there an opportunity in the juniors? Because they're down here. This is not rocket science. I can't believe it's like, if you can't figure that out, it's like, okay, how are you gonna beat the market? And of course, like, just because something is cheap, incredibly cheap, maybe generational cheap, does that say that, okay, if you sow today, you're gonna be harvesting immediately tomorrow, or within the next month, within the next 6 months, within the next year? No. If you started sowing here, you were in for a massive 1 year decline before the grand harvest came. So what do you think is going to happen here? Are juniors going to stay this cheap forever? Generationally dislocated from price of gold and major miners. If you think that, go ahead. That would be a world first in history, basically. Of course the risks are to the upside. But when is that going to happen? I have no idea when the market is going to figure this stuff out. There's a reason there's a reason I beat the market, because the market is so stupid. And it can stay stupid for a long time. And to join its stupidity is the most stupid thing you could do. It's like, yeah, I'm throwing in the towel down here. Let's say, we have 6 months more of downtrending action, and juniors go from like ridiculously cheap to extremely bonanza cheap. Oh, what am I gonna do then? Sell? Heck no. It's like, if you're gonna watch a chart or whatever, it's like, watch the valuation, watch sentiment, etc. They're not tracking the metals anyway. And it's like, you have cases, take Elora for example. What has happened with this stock or this story? It's just gone better and better. What was I doing as it got better and better, and the Mr. Market decided that, yeah, I feel like selling this particular stock because sentiment was bad. I was buying as much as I could. I'm still buying. I think this is, in my opinion, a great risk-reward opportunity. So if I hadn't seen this decline, I wouldn't be buying like this. But most people complain about getting the opportunity. Most people complain right now about this opportunity. And then they can never figure out how can I not beat the market? I expect stocks to always go up. As soon as I buy, they should go up every day. No, you sow when it's cheap. You reap when it's hopefully a lot more expensive. And that doesn't mean that every case will play out. But it's like if you can't, if you're complaining about being able to buy here, buy more here, how on earth are you gonna outperform the market? It's like even this is one of my family's hodl portfolios. I barely do any trades in this one. It's made up right now like 40 juniors. All with either they're very undervalued and high risk reward, or they're typically undervalued but with probable growth. I expect this to just keep going like this, along with sentiment going up and down. I'm basically doing nothing, getting paid for it. Beating GDXJ by 3 with 40 juniors right now. And people are like, again, they don't buy here. They start buying here typically when it goes up, and they feel like, oh, now I'm comfortable buying. Not when the opportunity was best, but when I'm comfortable buying. And then they get a day like today, and they're down, and they start crying. I mean, Jesus, like, if you don't understand what an opportunity is, you're going to be crying every time it comes along. And this is one my longest semi-active to active account, and this is just a pretty small amount of capital deployed here, and I basically, let's say, semi-trade in this one just to stay sane, let's say, because it's fun to beat the market. It's like, okay, yeah, today this is probably down 3%. Like, who cares? Do you think I care? I have long periods of downtrending actions. I mean, this is the flash crash. This is like sideways actions, boom, up, almost 1 year of downtrending action, then boom, up again. And who knows, maybe it will be 6 months of downtrending action before it goes up again. And it's like on the whole point of people whine about volatility. Today we're having volatility. I've seen some great cases down 8%, some perhaps 9-10%, some are down 1%, some are unchanged, some are even up. So I've just put in a bunch of stocks here. It's like, okay, this portfolio, invest full invested all the time, small amount of capital, so I can be nimble, flexible, shuffle between positions, etc. Anytime when you have volatility, there's potential for value arbitrage or opportunity arbitrage. Let's say you have 10 stocks you like. They're pretty much equally undervalued. You believe they will be up 150% over the next 12 months as a base case. And, not adjusting for sentiment. They might be up 300% if sentiment is good, or they might be up 50% if sentiment is bad. So there's a huge swing in between, huge spectrum, wide spectrum of future pricing scenarios. But you're looking at the signal. You think that, I think this is probably going to grow. I think they're going to add even more value to the company over the next 12 months because I think they will, pretty much add ounces. And you estimate that, I think on average the base case is that the price will also be up 150%. Sure. Basically, like I've been saying all this time, I'm buying future scenarios. future scenarios, seeing the future early. I'm trying to look forward. Like, okay, if I visualize company X, what's it gonna look like? What's the sentiment gonna be like? What kind of news will be out in, let's say, next 6 months? Jump forward to, let's say, September. What will have happened? What do I think the How do I think the market will look at the company? How will the marginal investor think about the company after these things I think will happen have happened? Will it be probably more valued and priced higher than now or not? Because I'm buying the future. I'm trying to buy the future, base case scenario in the future, which is priced based on short-term expectations. So basically, what typically happens, take a seasonal junior, for example, their performers tend to suck early on. I mean, look at this chart. I mean, if you see, I would suggest that the latter half of each year is the best part in terms of portfolio seasonality. And, I think that's because I typically have a lot of Northern explorers where the exciting period where they start drilling and they start releasing news, and there's a risk of releasing news, in AK risk of, or a chance to get rich overnight. I mean, that's the latter half, and they suck before that. So my portfolio is typically very uh, lags, let's say. So not only now, for example, the juniors, which I'm fully invested in, are lagging the majors and gold by a mile, which we can see here. I don't have the new Monte value. Well, I can find it, I think. Yeah, basically this. So they are lagging big time. The macro trend, the macro sentiment, which affects all my holdings, massive lag. Horrible past, risk to the upside in the future. Okay, so I have that as a tailwind. Basically, this could pop off any time right now. It might take a month, might take 6 months, whatever. So this is in store. This is built up energy, let's say, or the tide has not even come yet. Okay, and then you go into the more like micro scale. For example, you have cases like SK or Goliath or Snowline or any other Northern explorers, especially Northern explorers. They have not yet even entered their exciting. So on a micro perspective, they're down here. So you have basically poor junior sentiment multiplied by poor seasonality. So if this was a season, like, okay, this is the end of the exciting drill season, etc., we're here in the juniors, in the Northern explorers primarily, and you also have this seasonality, if you can call it that, in the overall juniors as well. So it's like, okay, if I right now were to, okay, to set myself up for, a good latter half of this year, for example, okay, I would be in juniors, obviously, because the risks are to the upside. Okay, that's nice. I mean, this is going to go up here. These sentiment levels are going to go up to greed one of these days. Again, don't know when, but that's where the opportunity is. Okay, and then if you go down to like micro perspective or subsector, let's say, you also know that. Let's fast forward to, yeah, let's say June 1st. Let's say on average this is also when the Northern explorers are starting their excitement period. They're ending their sentiment bottom in terms of excitement. So you have two things that provides risk to the upside. So again, if I just wanted to, if if I wanted to set myself up for the best possible risks to the upside going forward in the as we approach second half of this year, I would be in juniors because they're universally, let's say, undervalued. I would also be heavy on Northern Explorers because they are about to enter their seasonality, their positive seasonality sentiment period. Again, front run the market, front run what everyone is gonna do. They're crying right now. They're talking about how boring it is. Will every story be boring? No, of course not. We're nearing the end of the boring period for many juniors and are about to start the more exciting period. So again, this is not rocket science. You just have to figure out what is everybody thinking, doing, whatever. How are they gonna think in the future? What's gonna happen? I mean, if you don't know why and how you're gonna win, it's kind of hard to win. But most don't even know why they should win. They're like, yeah, they're buying something because they hear some dude say it's cheap, and when it doesn't go up immediately, or at least not go up every day for the next 300 days in a row, they start crying about it. And it's like, obviously they don't really know what they're doing. They don't even see the opportunity. They have no idea how you actually beat the market. They have no idea how an opportunity plays out. That there's a period where you actually are sowing, and then you have to wait for the actual harvest. That's how it works. Again, this is not rocket science. And another point is like, okay, how can you take advantage of volatility? See, if you're 100% long, like I am, and especially if you have smaller amount of capital, let's say you follow 10 stocks, or I don't know how many this is, and every stock is unique, but they typically, I mean, you can see now it's just a scattered mess, but like, yeah, you can see some trending together and some other trending the opposite way. But there will be, I'm not saying, this is a case by case thing, obviously, but it's like here, for example, here you have a stock or two stocks that are near 52-week highs. And here you have at least one that's at a 52-week low. Okay? Is there a possibility that you could sell some of this stock to buy this? Sure. There's a possibility. Or here, for example, here we have a stock that goes up. Maybe it was really cheap here. And here you have a few that goes down. And depending on what your case and the intrinsic value, etc., is for each case, you might be, again, it's like if a stock, let's say you have 10 stocks you like, 3 are down 30%, 2 are down 5%, and the rest are neutral, let's say. If nothing has changed for any of the companies, the case, I mean, you should obviously be selling some of the ones that are neutral to buy the ones that are down, whatever I said, 30%. Because if the case isn't intact, it means it was sentiment and volatility that brought an even bigger opportunity in front of your eyes, and then you reshuffle, so your highs will be even higher going forward. That's basically what I've done. I mean, otherwise, this, for example, this is not me holding. This is me holding, or a family portfolio, holding a bunch of stocks and just sitting totally idle. Great returns. This is my semi-active portfolio, like my play portfolio. And in this one, I 100% long all the time, but just switch around. It's like I think I bought some Snowline today, for example. Why? because it's one of the more exciting exploration stories and they're not too far away from drilling. And I think I can sell that at a profit without taking the assay risk. But if it goes down, given how good the target looks, it's like I don't really mind taking actually assay risk because they have already. I mean, they are already discoveries basically, the Rogue and Jupiter targets. So you know there's something there. I mean, they've hit 100 gram-meter holes on the first tries. So that's not like pre-discovery pure grassroots exploration risk. No, that's de-risked in one way, shape, or form. But I guess, yeah, okay, this slide as well. I mean, this is basically how I think you could think with volatility. This is only Bear Creek mining, and you see this kind of trading sardine action. And I've labeled like, okay, if we assume that Bear Creek mining will at some point in time, maybe even if it takes 4 years, will hit this level again. So within 4 years, you will be up, what level is 200% from now. You should be happy with that return. Just so you know. I know it sounds boring, 200%, but that's actually good return. A good return. Think of this for every stock out there. Because this is seasonality. I mean, this is basically why I think it's a good trading sardine. This is seasonality. Bear Creek mining is on this chart. So juniors overall are near an ebb, and someday there will be a tide, and when the tide peaks, a lot of the juniors will be up a lot. But then you have hundreds, thousands of juniors out there, and at any point in time, every junior provides you with the possibility or exposes you to some kind of opportunity level. Could be good risk reward, bad risk reward, whatever. But there will be, if I could put in more stocks here, for example, there might be a stock you own that's the equivalent of trading here with, let's say, 150% returns. But you have one stock that's been punished for some reason way more than the rest, and it's down here with, at 400% returns, let's say. So if you just held on to both stocks all the way through, yes, you'll be down, especially if you bought here. But if you're buying something that's gonna provide you with an even better opportunity, then basically, even though the thing you're selling, which is down, so you lost money on that, and you're converting a paper loss to a real loss because you sold out. But if you're buying something that's even more undervalued, that's basically value / opportunity arbitrage. Yes, you're buying something that went down in value. Your purchasing power has gone down because it's gone down in price. But you're buying something that's even better opportunity. So you're actually hiking up your future returns by reshuffling your portfolio. So you're selling at a loss to pick up an even better opportunity, which will has a future expected returns that are even greater. So in time, you would get kind of this kind of thing. It's like, I think this was a 50% retracement, but you see that like every additional wave up takes my portfolio higher, this semi-active portfolio, because I do reshuffling. Maybe I'll buy more of these right now instead of these. And if the cases are somewhat intact here, when we hit the next sentiment high, for example, these might be up. I can't, draw it out anymore, but let's say they're up here, but these ones get up here. So I will have a even higher swing. And then at any point in time, right here, every stock you're seeing here is providing you with a different opportunity. Every time. Every day, any given point in time, there's an opportunity. It's like right now. Right now the opportunity is great, and tomorrow it might be better because they go down more, and even better after that, even better after 6 months, after a year, whatever. The only thing we can do is make the most rational decision at any point in time, and we have no idea. We can't guarantee the future. We can just set us up for the highest possible risks to the upside, let's say. At least the best risk reward scenario. And like you see here, for example, I mean, here some stocks have gone up, some have gone down. Maybe these are actually better buys than these at this point in time. And then we fast forward a bit, and they've gone up, and the other one has gone down. Maybe you sell these which you bought here and buy some of these, and then we fast forward here. Now there, let's say a few of them at least are up again, and some of these are down. I mean, you get my point. I mean, there's constantly opportunities out there. Any given second, there's opportunities. You can play any hand you want. The stock market is like pretty much like having an endless amount of poker hands to play at any given time, and they change. That maybe take for example, where is it? I was gonna look at Eloro. Anyway, let's take this one instead. It's like, okay, at right here, let's say Bear Creek Mining. I don't like Bear Creek Mining, but just take a random high quality stock. Right here, let's say it's, pocket eights in terms of quality, because again, opportunity cost is all other stocks you could buy, put your money in. Okay, so right now you're happy because you're buying the equivalent of pocket queens everywhere in 20 other stocks, and then time goes on, and bam, at this point in time, wow, you realize, hey, this Bear Creek Mining or this particular stock, now it's pocket kings. This is one of the better hands out there I could play. And the ones that were pocket queens here, for example, maybe they've gone up, maybe up considerable. So the risk reward has gone down to like pocket tens. Well, I'm switching and buying some of these pocket kings here. And then we fast forward a bit. So now especially if it would be a trading sardine. So now the opportunity in Bear Creek Mining on October 28th, that's gone down to pocket nines. But there are some other stocks that have, let's say, increased in value and gone down in price. They're up to pocket queens. So you're selling a bit of Bear Creek Mining again, buying the ones that provide a better risk reward. Time goes on, we're down to March, or we're up to March 12, 2022. Okay, this was the flash crash. Basically everything was pocket kings right here, but assuming it wasn't a flash crash, so now this story is back to pocket kings again. Maybe actually, yeah, down to aces here. And you have some stocks that went down from pocket 8s to this level, then they're like pocket 10. So good opportunity, but even better here. Okay, so you buy that. It's like, I hope you get what I'm saying. It's like any day, any point in time, any swing in price, assuming no change in news, etc. Opportunities constantly just change. And it's your job, even if you're fully invested, you can reshuffle. Okay, right here, maybe stock you love back here, it's not as good of a risk reward right now, but the stocks you didn't like back here has gone down so much in price, etc., that it's actually a good case. So you reshuffle. I mean, you could have, if you want to be more active, which is again harder. I don't think many people can do, let's say, what I do, because you have to take a lot of, let's say, punishment and stress or whatever. But it's like at any point in time we can only do the best possible decision based on our assumptions of the future. And it constantly changes, and the more volatility you have, like a day, like today, for example, with huge volatility, and already, okay, gold is up, back up a bit, silver's. I mean, this is not, again, it's like 0.4% down, and you see some gold juniors down 9%. I mean, Jesus Christ. Some of the best stories out there, you get that's a 10% discount on everything the company has, all the future scenarios. 10% discount because gold is down 0.37% today. And people can figure out how to beat this market. I mean, are you kidding me? Are you kidding me? I mean, it can't get more obvious than that. Nothing has changed for these companies. Most of them. No news out. Project is intact. The only thing that changed was that price today of gold happens to be down 0.4%. And some dude is happy to sell one of the best cases in the space, let's say, for 10% less. So some dude, I mean, what he's basically saying by selling that, that it's worth 10% less. All futures, no, ridiculous. I'm going crazier trying to, my hardest to explain is like, this is not rocket science. Don't do what everyone else is doing. Don't look at the goddamn price of gold or silver, try to guess too much. The only thing you can control is price, and when the only other thing you can actually know is that sentiment always changes. So it's like, that's pretty much how you could sum up. I can make a strategy of this easy. Just like right now, for example, buy a lot of juniors, wait for it to go higher, sell here, wait for it to go down here, buy again. I'm more of a stock picker personally, but it's like you can have 100 different strategies. But one important thing is to realize that price is what you pay. And price is based on short-term expectations and sentiment, etc. And the sentiment always changes. So it's like, I mean, please, for the love of God, start making more rational decisions and stop. I mean, if you whine, if you're crying, it's like, that's victim mentality. When did crying ever help? It's like, how often do you see me cry about anything or whine about anything? Never, because I understand what this is. I understand the situation we're in. How can I complain about this? What sector can I get a possibly better risk reward than this right now in the gold juniors? I consider myself very fortunate, very lucky to be aware of this sector right now. And I have never seen a better opportunity in the juniors since I started than this. So how on earth can I be complaining? I think I will have a massive harvest sometime in the next 1, 2, 3 years. Absolutely massive harvest. Life-changing harvest. And I can't find that if I'm, let's say, buying a sector or whatever that's, okay, I removed it. It is at a sentiment high. Can I get, what would need to happen for Tesla to bring a massive harvest? That's going to be very hard. This was a long rant, but it's like, please do yourself a favor and stop treating this market as some rational pricing mechanism, especially the junior sector. It is completely brain dead. Most people have no idea what they're doing. So be amused instead. If you see a high quality junior down 10%, when gold is down 0.4%, see it for what it is, and like be amused, like, okay, someone made a mistake there. That's how you should see it. Never, in my opinion, it's like, the saying the market is always right. I assume the market is always wrong. I mean, the very act of buying something is that you're saying that you think the market is wrong because the opportunity is too good, whatever. So like, stop worshipping Mr. Market, and stop looking at gold and silver and daily swings and whatever. It's like, no. Uh, did I remove that as well? Anyway, know why you should win. Know how you're gonna win. Know why Northern Explorers, let's say, could be provide potentially better returns in the second half. The more stuff you know, the more stuff you know what people are gonna do, how they think, the more tools you add to your tool belt, you're gonna be better and better and better, because you'll know what everyone is gonna do before they even do it, and that's basically what you're taking advantage of. And as we know, this momentum thing, people sell stuff that's cheap just because it's gotten cheaper, and people will buy stuff that's getting more and more expensive just because it's going higher. I mean, story all this time, gonna happen every time. The more depressed people are, the cheaper stuff gets, and they're so depressed sometimes that they'll walk away from the most obvious cases just because they can't take it anymore. And you're down there, it's like, shoveling shares into your portfolio, basically, the grave digger as you are, because you know that's the same people are gonna buy them from you at 52 weeks highs when sentiment is good. So yeah, long rant here. Assume I'm biased about every stock I mention. Assume everyone is a sponsor, etc. Do what makes sense to you. This is not. This is how I think about things. Do your own due diligence. I can't guarantee anything. It's all down to risk reward. And first of all, take responsibility and have a game plan. If you can't see why you should win, you're probably not gonna win. But if you can see what's probably gonna happen, where the risks are, where the risks to the upside are, you should do very well. And again, think of a day like this with volatility. Think of that as a day when a lot of opportunities can change. So don't sneer at it. If you find a great company that's down 10% because some guy got spooked by gold being down 0.40%, that's a massive thing. That's going to compound in the future, big time. So stop, don't be lazy, etc., and being scared, etc. See it for what it is. Volatility brings opportunity. And just do exactly the opposite of what the guy selling in panic is doing. Okay, long run. Thanks for listening. Bye.